Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Andy Swan. He's a co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking Urban Outfitters. Stock's down a little bit today, maybe on the back of American Eagle and Abercrombie and Fitch earnings overnight, but this stock's still up 50%. What kind of data do you have out of LikeFolio that's supporting this kind of move?
Yeah, it looks pretty good for Urban Outfitters. I would say everything probably except for its namesake brand. Urban Outfitters, we're seeing a decline in customer mentions and web visits, but everything else from Anthropologie, Free People, all those other brands seem to be doing really well. We're really seeing a big driver coming from its new clothing rental service called Nuuly, Nuuly. This is really kind of taking off with consumers. People really like this. I think Urban Outfitters saw the success that Stitch Fix and Rent the Runway were having and said, we've got the clothes, we've got the distribution, we could probably do this ourselves. And I think it's been a really nice success. We're seeing, nearly 75% year-over-year growth in web visits to the company, indicating, that word is spreading on this. And more importantly, what we're seeing is really high levels of consumer happiness with the brand and with the experience. And we're starting to see some signal that experience with Nuuly in terms of renting clothes is spilling over to their other brands like Anthropologie, Free People, and so on. And so they're kind of creating this flywheel effect that, a lot of companies have tried but have failed to do. And so we think Urban Outfitters overall really well positioned. We liked the last report. They put out a really nice revenue growth and profits moving significantly higher. So yes, the bar is high and Wall Street has some pretty high expectations for this, but we do think everything we see at LikeFolio from a consumer data perspective suggests that their strategy is working, their new brand is working, it's bringing people in, and those people are becoming happy and loyal customers.
Andy, full disclosure, this might not be my age demographic, set of stores, but I've seen Anthropologie and Free People on credit card receipts, so I know my two daughters like these clothes. The question about Nuuly is, it sounds like they rent clothes or they thrift shop clothes, right? They've got a Nuuly rent and a Nuuly thrift. So yep. Are they doing like a Rent the Runway and like a thrift store where they're selling peer-to-peer? Is that what this is? And what kind of a market do you see for this?
Well, what I think what really is resonating with people is that I think the subscription model is really flexible and very cost effective. And so I think when people can kind of plan their, kind of clothing, fashion spending in advance with a company like this or with a service like this, it just gives them a lot of flexibility. It gives them a lot of ways to deal with the company. And like I said before, what's really critical for this is that entry point into dealing with the company leads Urban Outfitters to be able to sell those people on its other brands for the new clothes, and I think that is happening in some way. So we see it as a driver of not just revenue, but just expanding the base of the consumer, the customer that Urban has a direct line of communication to.
Yeah, Andy, last quarter, they saw big growth. You mentioned Free People Group, nearly 27% growth, 10.6% at Anthropologie, but Urban Outfitters actually decreased 14%. Yeah. Is this what that company is doing, where they're expanding their footprint into different revenue streams to kind of offset maybe a brand that's a little bit older within their marketplace, that, hey, we can offset some of this if we continue to innovate? And I noticed your happiness levels on Urban are just below American Eagle, but above Gap Stores, up 45% so far this year. So there's definitely winners out there in this space.
Yeah, there definitely are. I think, the entire space is, quite frankly, stronger than I thought would be coming into the holiday season, which is a really good sign that the consumer has more dry powder than we expected. And overall, I would just say, Yes, I think, we talk on this show a lot about how Pepsi, or some of these big brands, they can own everything you see in the grocery store, and you don't even know that you're necessarily buying a Pepsi product. So if you get turned off of Doritos and move to Cheetos, well, guess what? Pepsi still wins. I think it's the same kind of idea with Urban Outfitters. They're diversifying very cleverly the way that they approach this same demographic of consumer with different brands, different offerings, subscription or store in the mall. They're going to have you covered, and they're going to be ready to be on top of the next trend with one of those brands to keep that customer captured.
Yeah, definitely on that one. And real quick, Andy, do you have an earnings score on this one? Because it seems like maybe your mentions count's kind of equivalent to the rise that we've seen in the stock so far this year.
Yeah, we think they're going to post some really good numbers. I like the fact that the stocks dipped a little bit going into this on some competitors. I think they're best of the bunch. So if I'm going to lean, I'm going to lean to the upside for sure.
All right, great stuff, great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at LikeFolio, breaking down the data for us. So pretty positive here, Kevin, and I like that mix because that's what happens in retail, right? The store's really popular for 5 years, and then maybe another brand or another, segment of the industry changes. Here they are. I didn't even know Free People was owned by them.
Yeah. Oh, I did only because I